Three stocks to watch January 2018. That is what we are doing here today, guys. Welcome into one of my favorite series on the entire channel. I am Jeremy. This is a financial education channel, and today we're talking about three stocks that all three of these companies are probably going to be reporting numbers in the month of January, and kind of why you want to pay attention to them and whatnot. Very interesting three companies I'm going to be sharing with you guys here today. I hope you absolutely enjoy this video. Make sure if you're not already in my stock market membership group, you get in there. This is your last chance to get in for $29 a month. It's going up to $49 a month on December 31st, guys, for anybody that joins after that point. So make sure you get in there. You got a ton of access in there to my 12-part stock market options course, to knowing what stocks I'm getting in and out of, stocks I'm looking into, all that kind of stuff, guys. You definitely want to be in there. There's a third link in the description. Under Armour is the first stock we are talking about here today, guys. This one has been an absolute disaster. Look at this one, down nearly 50% year to date. What a disaster of a stock Under Armour has been. From one of the Wall Street darlings, one of the hottest stocks, to an absolute disaster zone stock. Now, in the last 5 days, the stock has bounced back very strongly, up around 11% in the past 5 days. So that's actually pretty impressive. Now, last time Under Armour reported numbers, oh my gosh, it was just a disaster. Weaker demand for Under Armour products across the US and Canada is clearly hurting the athletic apparel retailer. The company trimmed its profit and revenue expectations for the full year Tuesday, citing a difficult backdrop in North America, its largest market by sales. Although it's too early for us to provide an outlook for 2018, our initial assumptions anticipate continued strength across our international direct-to-consumer business, contrasted with a difficult environment in North America and wholesale business well into the next year, CEO Kevin Plank said, okay? Then we look at their actual results here, and their revenue, this was reported back in October, right? Revenue was down 5%, guys, and this is supposed to be a growth company. This is supposed to be a growth company, and their revenue was down 5% last quarter. Now, the reason being is, obviously, if you look there, the wholesale business declined 13%. That's an absolute disaster. Now, on the flip side, direct-to-consumer was actually really strong. Look at that revenue, up 15%. So direct-to-consumer business is really strong. The wholesale business is really weak. The wholesale business meaning the products they actually sell into retailers that then go ahead and sell those products, okay? Direct to consumer is more like people going to actual Under Armour stores, ordering on underarmour.com and things like that. That's more direct to consumer stuff rather than this other wholesale business, which is they sell to, you know, Dick's Sporting Goods or whatever stores out there that sell Under Armour products, okay? So it's a difference there. So when you're thinking about Under Armour, you got to think about what are some of their biggest customers. Obviously, Dick's is going to be probably their biggest customer, right? They're the biggest, you know, especially retailer in North America as far as athletic apparel goes, right? If we look here, comp store sales in the last quarter were down for Dick's Sporting Goods, guys. That's really bad news for anybody that sells into Dick's Sporting Goods, especially a company like Under Armour that gets a significant amount of its revenues and profits from a company like Dick's. When your comp store sales go negative, that means that everything in that store is probably selling less and less, okay? So that's a very bad sign. Last year, Sports Authority filed for bankruptcy, okay? That was another one of Under Armour's biggest customers. So Sports Authority files for bankruptcy. That's like 450 stores there. They closed down, and you would think that Dick's would be able to pick up all that business and just get a ton of more business in those stores, but then you look at Dick's Sporting Goods, and what happened there? Their same store sales were actually negative, guys. It was actually negative. So it's not like things have picked up so strong at Dick's. So this obviously hurts Under Armour big time. Now, if we look at what's expected for this upcoming quarter, not much is expected. Analysts are expecting basically a break-even quarter as far as earnings go. A year ago, they actually had 23-cent profit. Then we look at the revenue side. Analysts are expecting only 1.4% sales growth, guys. That's like nothing there with Under Armour. So this is a very interesting company because it's kind of at a situation like, has this one been beaten down too much? That's one thing we got to ask ourselves. Has it been beaten down too much? You know, the wholesale business, maybe this is just something that's going to have to go through over the next year, and then they're going to kind of bounce back. We see direct to consumer is a very strong, which is obviously a very good sign for the company that maybe the brand isn't as weak as it seems. It could just be wholesale customers just aren't moving as much merchandise as they were before, and for that reason, it's hurt Under Armour in a big way. So this will be a very interesting quarter to kind of look at the numbers and see, what's going on with this one? Are they going to be on the comeback, or are they just going to be, you know, a dog and just keep getting beaten down here, guys? Stock number 2 to watch in the month of January 2018 is Netflix. Now, this is a super popular stock that I hardly ever talk about on this channel. I hardly ever talk about this one, but it's such a popular stock. We see year to date up 52%. It's had an amazing year this past year, right? Now, if we look at their last quarter, they reported in October, and once again, they should be reporting numbers in January. Netflix nailed these numbers, unreal numbers. Netflix added 5.3 million subscribers during the third quarter, guys. 5.3 million signed up for Netflix in a 3-month span. That's ridiculous. Beating analyst estimates. Revenue of 2.98 billion versus 2.97 billion was expected. EPS actually came in much stronger than expected. 37 cents versus 32 cents was expected. And obviously the subscriber number there, 5.3 million gained versus the analyst thought somewhere around 4.5 million there. Look at this here, and it's willing to spend money to continue that trajectory with a new content budget of between $7 billion and $8 billion for next year. The figure up from $7 billion, guys. This is absolutely amazing. I mean, this is so much money, and we're going to kind of get into some things here in just a second, but that is so much money to just be spending on new content next year. $7 to $8 billion. Imagine how much content you can make or buy with that type of number, guys. The company has added about 109.3 million subscribers globally. That's crazy. Netflix said it added 850,000 subscribers in the US ahead of the 810 million that the street was expecting, okay? Unreal numbers there, guys. Now, so we look at there, obviously the show that they are like advertising like crazy, which is this new one, is a show called Bright, okay? It's got Will Smith as a star of it, probably one of the highest paid actors in literally the world, and you know, they got a full soundtrack around this featuring tons of big name artists. I noticed. Imagine how much money they're spending just on this show named Bright. It'll be very interesting to see what type of results they get from this, and if this is going to obviously help the subscriber base grow a ton, because they are funneling a massive amount of money, not just in, you know, having stars on the show, not just, you know, in all the special effects and you know, soundtracks and all this stuff. They're spending a massive amount of money on advertising this new show called Bright. I've never seen Netflix advertise a show so much. Like, I'm watching NFL games and college football games, and I'm seeing the commercials, and those spots are very expensive to do, and Netflix is doing these in mass scale. I'm seeing it on YouTube everywhere. I'm seeing the ads for this new Will Smith show called Bright. Should have done Fresh Prince of Bel-Air Part 2 where he's like the father. That would have been much cooler. Netflix, here we go. So look at this here. A year ago EPS, they did 15 cents. Analysts are expecting 42 cents, okay? So over like a triple up basically in the EPS there. That's a big jump there. And then if we look at the sales growth and as far as revenues goes, analysts are expecting around a 32.5% jump in revenue there, guys. So it's going to be very interesting here with Netflix to see, can they keep up this type of growth? Because at a certain point, you would think the numbers will start to get too hard to keep beating, you know? To keep adding 5.3 million subscribers a quarter, that, you know, that might be a little unrealistic, but then when you have big launches like this and you're spending huge marketing budgets and whatnot, maybe you can keep up that type of growth. This is going to be a very interesting one to pay attention to when they report numbers, probably in January. Caterpillar is stock number 3 here. Caterpillar, this one's up 64% year to date. It has had an absolutely amazing year. If we look at the 3-year on this, it's a very interesting chart because this chart reminds me of a stock I actually own. So 2015, the stock went down 26%. 2016, it came and bounced back big time, up 36%. This past year, up 64%. 3-year change, up 61%. This chart reminds me so much of Wynn Resorts, obviously my biggest position, because in 2015, it was even more of a disaster in Caterpillar, down 52% on weakness from China, and that's actually what hurt Caterpillar back then. And then you look, it bottoms out literally right almost at the same time Caterpillar does, right around January, February 2016. That's almost exactly where Caterpillar bottomed out there in 2016, guys. That's crazy. And then it goes up 25% in 2016, another 95% plus this past year. It's crazy just how much those charts remind me of each other. Caterpillar, so this is last time they reported numbers in October. They should be reporting new numbers here in January. Caterpillar on Tuesday blew past Wall Street's profit and revenue estimates on surprise surprisingly strong demand for its construction equipment in North America and robust sales in China, pushing its shares up 7% in early trading here. The company also raised its full year forecast for sales and earnings, expecting revenue in its construction business to surge about 20% and its mining business to jump 30%. Guys, I guess there's a ton of Bitcoin miners and Litecoin miners that are using Caterpillar equipment to mine some of these coins and whatnot. I'm just messing with you guys, but that's still a crazy impressive growth there. In the Asian Pacific region, Caterpillar's third biggest sales jumped 57%, guys, to 1.29 billion, boosted by demand from China. These numbers are insane. 57% sales jump in the Asian Pacific region. So if we look at what analysts are expecting here, analysts are expecting earnings of around $1.76. A year ago they did about 83 cents, so it's basically about a double up there in EPS growth. So very impressive if they can hit those numbers. And then as far as revenue growth goes, almost 24% revenue growth the analysts are expecting for this upcoming quarter. So Caterpillar is a really interesting name. We know North America is getting stronger and we know China is also getting stronger. So they're in a very good position because when the macroeconomics in those two markets are very strong, that is like Caterpillar's business. Caterpillar's business is so dedicated to the US market and so dedicated to China. I mean, I don't know the exact breakout, and I don't know if they break out exactly how much revenue comes from just, North America and just comes from just China alone, but I can almost guarantee you it's probably around 80+%, guys. They're heavily reliant on those two markets in a big way, guys. So be very interesting to see what happens there. I hope you guys enjoyed this today. 3 stocks to watch in the month of January 2018. Hope you enjoyed. Hit a thumbs up if you did. Thank you for watching, guys, and have a great day.